All right, good afternoon, folks. This is your free daily video from seasonalswingtrader.com. Today is February 24th, 2017 at 1:30 p.m. Central. And as we go into the weekend here, going to the close, I want to take a look at a market we've been watching very closely, and that is crude oil. We're looking at the CLM7 June crude oil contract on a daily chart. And you can see here, after having some nice cycles in and out, bouncing around off the 50% retracement level, we put in a high here, which is number 1 point right at the beginning of the year, 1st of January. And we came back down, established a number 2 point around the 53.75 level, and then came back higher and gave us a number 3 point, which I'm using as 56.40. Since then, we've traded very range bound, very narrow price action. You can see here on what I believe is February 7th or 8th, we came down, did pierce and take out that number 2 low here, but you can see we were not quite able to sustain that low. We came down to 53.25 and ended up closing at 53.72, right at a number 2 point. So that was not enough conviction here to establish long, and also we typically like to see a 1 or 2 day bar close and then a retest before getting short. Well, the next day we got even another low, which looked like it may hold initially, but the 100-day stopped it and ended up closing back higher, and ever since we've been chopping around since. So we do not officially have a 1, 2, 3 top at this point. Also, what we've been noting causing some hesitancy about getting short this market is looking at the seasonal price action. So if you go up here, we can see from a historical standpoint, we've got a 3-year price average and a 5-year price average. The 3-year price average shows us trading right around the 66 range, and the 5-year average shows us trading around the 53 range. And of course, as of today's trading, we're trading around the 54, 55 range. Looking down here at the 10 and 15-year seasonal price trends, let me expand this just a bit. You can see we've got a very strong seasonal trend bias here to the upside, most of the time putting here a bottom here at the end of January before exploding higher into March and into the summer months. We haven't quite gotten that. We got our rip higher here, which kind of coincides with this action right here, but we haven't really gotten that measured move that we're looking for from a seasonal basis yet. So going against the grain, kind of counter seasonal in our initial bias just from a technical standpoint. If we go over and look at USO, we would expect to see the same type of price action since it mirrors the crude futures market, but you can see here also kind of paints a better visual picture that we have very strong seasonal bias to the upside starting around mid-February and going into late March. The yellow line is going to be the 10-year, and the green line is the 5-year. You can see the green, the 5-year is not as strong as the 10-year. Let's go over here and see what we've done in years past. So looking at 2016 here, the white line, you can see we did get a rise higher. 2015, more of a flat line type action. 2014, we slid lower. And then here's 2013, we slid lower and then bounced a little bit higher. We'll go to look at a couple more years here. 2012, more flatline action. 2011, we did get bounces higher, and then we'll go to one more, do 2010, and it looks very similar to the 10-year price average. So with that being said, we are not totally opposed to taking short positions here in the face of what should be higher prices from a seasonal standpoint. But I will call to your attention here, we have to look at the weekly. Looking at the weekly charts are very important. It shows the bigger picture here, the longer term trend. And I put this into focus in one of our videos, and what we have here is a head and shoulders bottom, an inverse head and shoulders. So most of you are probably familiar with the head and shoulders top. Well, the head and shoulders bottom works the same way, just on the flip side. So we've got one of the cleanest head and shoulder formations I've seen in a long time. We've got a left shoulder here, a head, a right shoulder here, and then of course this is your neckline. So a very, very clean neckline. A lot of times you'll see necklines looking like this. It's at angles and steep angles, but this is pretty much a perfect neckline, and also just perfect coinciding tops. We've got resistance here, resistance here, resistance here. We finally broke through, but this is where we've been chopping around for the last couple of months. We also have a very clean and pretty trend line here going back all the way to June of 2015, and we've got multiple touches here that we can watch. So what does this all mean? Well, from a weekly standpoint, it looks like we're going higher. We've got the 50 and 100 days angling up into the 200. The projected move here on this head and shoulders bottom is $26,000 or $27,000 a contract, and you take that by simply measuring from the head to the neckline. So that's your move, about $26, $26, $27. That will take you up through the 382 and the 50% trace level all the way to the 618. And so if we come back over here, does that look like it makes sense at the $78, $80 level? Yes, it does. Look at all this price action up here. So if the stars are aligned correctly and we do get some confirmation here, I would certainly look for some longer term bullish plays in crude oil, because we would be looking to go back up to territory that we haven't seen in quite some time. So that's our outlook today. We'll probably play this, look to do this a couple of ways. Maybe take some short-term positions to the short side with keeping in mind we have ultimately a longer-term bullish picture. But of course, that's all going to be heavily dependent on the marketplace, policies going on, fundamentals, and other outliers that we cannot control. So we just have to watch the charts, watch the price action, keep our risk tight, and we will see what happens. I'd like to remind everybody about Trade Thirsty's Traders Roundtable event kicking off tomorrow morning at 9 a.m. Eastern. Tomorrow, Saturday, February 25th, from 9 a.m. to 3 p.m. Eastern. I would encourage you to register at the link above, as spots are filling up fast. I know we've got a ton of registrants already, and the space is limited. So we've got 6 speakers here. Kicking off the session, Mr. Rob Hoffman from BecomeABetterTrader.com, followed up by Hubert Sinners from HubertSinners.com, Stephen Bigelow, CandlestickForum.com, Rob Booker with RobBooker.com, and then rounding out the session, Steve Primo from SpecialistTrading.com, and then last but not least, Larry Gaines from PowerCycleTrading.com. It's going to be a great session. Go ahead and click the link above to register, and hope to see you there.